Hey there, Iggy the Investing Iguana here. In this video, we're going to dive deep into the curious case of MapleTree Logistics Trust, or MLT. This Singapore-based REIT has seen its share price plummet by a staggering 10% in just 1 week. That's right, folks, MLT hit a new 52-week low and even a 5-year low, touching $1.29 on April 19, 2024. So, is this a sign of more trouble ahead, or could it be a golden opportunity to buy the dip? Stick around as I break down the factors driving MLT's recent performance and share my insights on whether we're nearing the bottom. Trust me, you won't want to miss this. Let's delve into the world of interest rates. As we know, the timing of interest rate cuts can be quite unpredictable, much like trying to see through a muddy puddle. At the dawn of this year, the financial market was leaning towards the possibility of 3 rate cuts in the United States. These cuts were expected to total 0.75%, a significant decrease that could have a substantial impact on the economy. The anticipation was that the first of these cuts would be initiated sometime in the spring, either in March or May of 2024. However, as time has passed, the likelihood of this first cut happening by June has dwindled to less than a quarter. Even by July, the odds are only even. The market is now shifting its expectations towards the fall, with September being the most likely month for the first rate cut. The probability of this happening is currently being priced in at a hefty 75%. This shift in timing implies that the subsequent second and third cuts might be delayed further. In fact, there's a chance they might not occur this year at all. The financial market is a dynamic entity, constantly responding to a myriad of factors. For instance, geopolitical tensions could suddenly escalate, taking center stage and causing significant economic strain. If such issues arise, they could potentially expedite the need for rate cuts. The share price of MLT is currently behaving much like a disappointed child who has just been denied a scoop of their favorite ice cream. This reaction is primarily due to the forecasts of interest rates. The prevailing sentiment suggests that MLT will continue to grapple with escalating interest expenses. This is akin to the burden of carrying a heavy backpack uphill, a strenuous and challenging task indeed. The value of MLT's assets is also under pressure, much like the weight that bears down on one's shoulders when carrying that heavy backpack. This pressure is not expected to ease anytime soon, adding to the company's financial strain. Adding to MLT's woes is the strengthening U.S. dollar. As the interest rates in the U.S. rise, the dollar has been showing its strength, much like a bodybuilder flexing their muscles. This has had a significant impact on many currencies, both in developed and developing nations. Even the robust Singapore dollar, known for its stability, has felt the effects. It has gained strength against the currencies of countries where MLT has significant exposure. These include economic powerhouses like China and Japan, as well as emerging markets such as Vietnam and Malaysia. In essence, the combination of rising interest expenses, the devaluation of assets, and the strengthening of the U.S. dollar against other currencies is creating a challenging environment for MLT. It's a tough climb, but with strategic planning and sound financial management, the company can navigate through these economic headwinds. The financial heat is not only being felt by MLT, but it's also impacting other REITs, particularly those with significant exposure to China or Hong Kong. For instance, CapitaLand China Trust and MapleTree Pan Asia Commercial Trust, 2 prominent players in the market, have experienced an 8% fall in their share prices in just the past week. This is a significant drop that reflects the challenging economic conditions these trusts are facing. Similarly, REITs that focus on logistics, such as ESR Logos REIT and Fraser's Logistics and AMP Commercial Trust, have also been hit hard. Their shares have seen a decline of 7% and 6% respectively. These drops underscore the difficulties faced by logistics-focused REITs in the current market environment. Even the strong and well-diversified CapitaLand Ascendas REIT has not been immune to these market forces. Despite its robust portfolio and diversified investments, it has taken a 4% hit. This goes to show that even the most resilient players in the market are not exempt from broader market and macroeconomic factors. These trends indicate that the recent poor share price performance is not solely due to MLT's individual struggles. Instead, it's a reflection of broader market and macroeconomic factors that are affecting the entire sector. These factors include everything from interest rate changes to geopolitical tensions, and they can have a significant impact on the performance of REITs. In the face of mounting challenges such as escalating interest expenses and the depreciation of currencies in its asset locations, MLT has demonstrated remarkable resilience. Despite these hurdles, the company has managed to achieve a year-over-year increase in both gross revenue and distribution per unit. This is a commendable feat, particularly when compared to other REITs that are grappling with double-digit percentage declines across the board. The growth experienced by MLT can be attributed to a couple of key factors. Firstly, there was an increase in contributions from existing properties in Singapore. This is a testament to the robustness of the Singaporean market and MLT's strategic investments in this region. Secondly, the company completed acquisitions in Japan, South Korea, and Australia in the first quarter of FY 23/24. These new additions to MLT's portfolio have contributed significantly to its revenue growth. However, it's not all smooth sailing. The company's performance in China has been weaker, which has partially offset the growth achieved elsewhere. This highlights the challenges of operating in different markets, each with its unique economic conditions and business landscapes. Another factor that has been a drag on MLT's growth is the depreciation of various currencies against the Singapore dollar. Currency fluctuations can have a significant impact on a company's financial performance, particularly for those like MLT with international operations. Despite these challenges, if we were to consider the company's performance on a constant currency basis, the picture would look somewhat different. In this scenario, both revenue and net property income would have grown by 4.8% and 4.1% respectively year over year. This indicates that, despite the external challenges, MLT's core business operations remain strong and are showing positive growth trends. In the ever-changing landscape of global finance, the question on everyone's mind is whether we've hit the lowest point or if there is more turbulence to come. There are numerous factors at play that could potentially exacerbate the situation. The global economic outlook is currently rather bleak, burdened by high interest rates, a slowdown in growth, and ongoing geopolitical tensions. These elements are the primary drivers of MLT's share price performance. As a diversified real estate investment trust, REIT, the performance of MLT's assets in various countries plays a pivotal role in its overall standing. Predicting the exact moment when the market will bottom out is a complex task, akin to finding a needle in a haystack. However, it's noteworthy that MLT's trading price is already below its long-term book value. This could be an indication that the market has already factored in the current challenges and future uncertainties. In the past, we've discussed the strategies that MLT and other REITs are employing to stay competitive and rejuvenate their portfolios. One such strategy that MLT has adopted is making value-accretive acquisitions. The company has invested over $900 million in acquiring 9 modern Grade A assets across 4 countries. These acquisitions are fully occupied and have long weighted average lease expiries. This strategic move should enable MLT to grow its total assets under management and further diversify its portfolio. These acquisitions serve as a testament to MLT's proactive approach in navigating the challenging market conditions. By investing in high-quality assets with long-term leases, MLT is positioning itself for sustainable growth in the future. Despite the gloomy economic outlook, MLT's strategic moves highlight its resilience and commitment to delivering value to its stakeholders. So, is the worst yet to come, or have we hit rock bottom? There are many factors at play that could make things even tougher. The global economic outlook remains gloomy, weighed down by high interest rates, slowing growth, and persistent geopolitical tensions. These are the biggest drivers of MLT's share price performance, and as a diversified REIT, the performance of its assets in other countries plays a crucial role. While we can't predict exactly when the bottom will be reached, it's worth noting that MLT is already trading below its long-term book value. We've shared before what MLT and other REITs are doing to stay competitive and rejuvenate their portfolios. MLT has carried out over $900 million worth of value-accretive acquisitions in 9 modern Grade A assets across 4 countries. These acquisitions are all 100% occupied with long-weighted average lease expiries, which should allow MLT to grow its total assets under management and further diversify. Alright, folks, that's a wrap for today's deep dive into MapleTree Logistics Trust. We've covered a lot of ground, from the impact of interest rate cuts and China's economic performance to MLT's diversification strategy and strong fundamentals. While the short-term outlook might be challenging, it's crucial to keep a long-term perspective and make informed decisions based on your own investment goals and risk tolerance. Remember, investing is a wild ride, but with a cool head and the right insights, you can navigate the ups and downs like a pro. If you found this video helpful, be sure to smash that like button and subscribe to the Investing Iguana channel for more insightful and entertaining content on REITs, stocks, and all things investing. And hey, if you have any burning questions or topics you'd like me to cover in future videos, leave them in the comments below. I'm always eager to hear from my awesome viewers.